Hello everyone and welcome to the online lecture series by Shet Vidya Mandir English High School and Junior College of Science and Commerce. Myself Jayesh Rajgur, and today we are going to study 12th Standard Economics new syllabus chapter number 7 National Income. My dear students, in the previous video lecture we studied about the meaning, definition and features of national income. Let us have a quick recap and then move further. As you all know, my dear students, national income is a macroeconomic concept. It does not deal with individual income. Here we are talking about nation's aggregative income. So, national income is one of the important subject matter of macroeconomics. The national economy comprises of all the firms and factories, shops and markets, banks and financial institutions, various departments and their offices. National income thus is a composite measure, my dear students. So, there are many activities going on in the economy, and a composite measure of all economic activities is national income. Activities such as production, distribution, exchange and consumption all are included in national income estimate. Similarly, it is also an objective indicator of economic welfare of the people in a country. Yes, my dear students. So, national income is also a composite measure as well as an indicator of economic welfare in the country. We also saw some important definitions given to us by National Income Committee. The committee states a national estimate measures the volume of commodities and services turned out during a given period counted without duplication, which here clearly states that national income is the flow of goods and services produced in an economy during a year. Moving further, there is another definition given to us by Professor Pigu. Professor Pigu says, national dividend is that part of objective income of the community, including, of course, income derived from abroad, which can be measured in money. So, in this way, this definition states that abroad income is also added up in national income. Professor Fisher says national dividend or income consists solely of services as received by ultimate consumers, whether from their material or from their human environments. So, in this way, my dear students, we have some meaning and definitions given to us about national income. We also studied some features of national income, and thus we came to a conclusion that national income is a very important macroeconomic concept. National income represents income of the economy as a whole rather than that of an individual. Similarly, it includes value of final goods and services in order to avoid double counting. Also, we saw that it is a net aggregate value. My dear students, you have studied about the gross and net values. The gross value is a complete amount which includes depreciation, but net aggregate value does not include depreciation, that is the cost of wear and tear of capital assets. Similarly, net income from abroad is also added. National income includes net income from abroad, that is difference between export value and import value x minus m, and net difference between receipts from abroad and payments from abroad. Financial year. The next point here states financial year. National income is always expressed with reference to a time period. In India, it is from April to March. Also, we studied that national income is a flow concept, my dear students. The real meaning of national income itself states that national income is a flow of goods and services produced in the economy, and thus it is a flow concept. And lastly, it is always and always expressed in money. So, national income is always expressed in monetary terms. It represents only those goods and services which are exchanged for money. Moving further, my dear students, let us today study and understand circular flow of national income. Circular flow of income is a basic concept in macroeconomics. The circular flow of income refers to the process whereby an economy's money receipts and payments flow in a circular manner. Yes, we have different sectors in our economy. Let us have a look at them one by one. Two sector economy. A two sector economy includes households and business firms. Here, there are only two sectors, namely households and business firms. So, here, Y, that is national income, is C plus I, that is consumption and investment. Similarly, as we move further towards the three sector economy, which includes households, business firms, and government sector, here income is C plus I plus G, that is consumption, investment, and government expenditure. Moving further, we have a four sector economy as well, which has households, business firms, government, and foreign sector as well. Here, we can constitute national income as C plus I plus G plus X minus M, that is export minus import. The circular flow of goods and money in a two sector model is explained below. Let us understand how exactly the circular flow happens and how exactly from one sector to the other goods and money revolves. Here we have a small chart which will explain you it in detail. There are two sectors, households and firms. It divides the diagram in two parts. The upper half represents the factor model, where you can see all the factors of production, that is land, labor, capital, entrepreneur. Similarly, the lower half represents the commodity market, where you can see the flow of goods and services. Yes, my dear students, you can see here are the two sectors, households and firms. In the initial stage, the firms require factors of production. So, from the households, from here, the circular flow starts. Land, labor, capital, entrepreneur reach the firms, and the firms use these factors of production to produce goods and services, which in return go to the households. Similarly, these households consume these goods and services as they receive factor payments from the firms, namely factor income such as rent, wages, interest, and profit. So, in this way, money flow and goods flow continues in a circular form. In the above figure 7.2, my dear students, the factors of production flow from the households to the firms. The firms use these factors to produce goods and services required by the households. Thus, goods flow from the households to the firms and from the firms back to the households. It is called product flows. In the same way, money flows from the firms to the households in the form of factor payments such as rent, wages, interest, and profits. Households use this income to purchase goods and services. Thus, money flows from the firms to the households and from the households back to the firms. This is called as money flow. So, my dear students, in this way you can understand the circular flow of income in a two sector model economy, that is households and business firms. In the circular flow of income, production generates factor income, which is converted into expenditure. This flow of income continues as production is a continuous activity due to never ending human wants. It makes the flow of income circular. So, in this way, my dear students, we have studied the circular flow of income in a two sector economy. In the next video lecture, we shall study some more interesting answers from the same chapter, national income. Till then, stay safe, stay connected. Thank you very much.